We're on another chat with Stephanie Murphy over in Spokane, Washington. And how are you doing today, Stephanie?
I'm good, John. How are you?
I am so good. I'm looking forward to this chat because we always have a fun time when we chat about whatever. What's on your mind today?
We do indeed. Well, lots per usuals on this little squirrel brain of mine. It's not really little, but whatever. But I do think that we should talk about the interest rates and kind of what they're doing, but then also
Okay.
how it all plays into what the world is doing, because as we know, we oftentimes get so hyperly focused on a micro level where we really need a macro level to really help us educate our buyers and investors and whoever else that we are helping by gaining that larger perspective instead of just the right here, right now, which is where we came off of.
Got it.
So if I am correct, interest rates are kind of leveling off a little bit. They're not continuing to climb like some have projected or, thought that they would.
Yeah, for the time being, they've come down from their highs. Their highs were a couple months ago now. The interest rates are down. And I would say level is a good word. They kind of go up and down a little bit every day, but it's certainly better than what it was. And I think a good time to buy a home. We've talked about this before. And so there are two costs to a home, the cost of the home and the cost of the loan, right?
Yep.
And homes are down and rates are somewhat down. And we've said this before, sellers are somewhat flexible. I think it's a great time to be looking at a home.
Yes, I agree. I don't think, okay, so, and then you can also correct me if I'm wrong on this, but I know that there are a lot of people that are kind of sitting on the fence waiting, thinking that we might drop back down again to those twos and those threes. In my professional and personal opinion, I'm like, sorry, you missed that train. If you were going to get on it, you should have.
I don't know anyone with credible information and background that would believe we're going to be in the twos and the threes anytime soon. I mean, not any extended thing. Maybe the fours, I've heard some people chat about. That's arguable. Fives and so on.
We're there.
Yeah, exactly.
Yeah.
So I wouldn't wait for rates to come down much. And I think, and Stephanie, we talked about this, spring buying season is going to be here in about 3 months. And there is pent up demand. It has not gone away. I think many people are going to get used to the rates where they're at, and they're going to see housing prices, and the spring is here and it's time to buy. And I suspect housing prices are going to start to rebound at that time. What do you think?
Well, so interestingly enough, I don't think we're going to see a rebound on pricing necessarily, because what I think has happened, especially in our market center, is we've been riding such a super strong, steady high for so long because it was a seller's market. And so oftentimes agents, especially a lot of agents that were new, got into the business, they don't really know how to guide or even, drive necessarily, which is insane to me, but whatever. So oftentimes these sellers were the ones coming up with their pricing, which is how and why you're seeing a lot of the price reductions or price corrections, as they're calling it, because now it's giving an opportunity for some of those stronger agents to go in and kind of regain that control of their clients, if they will, and have those tough conversations. I'm one that I've always been a tough lover. I love on you super hard, but I also deliver love in a tough way sometimes, where I'm like, I'm not going to tell you really what you want to hear. I'm going to tell you what is reality and truth and what you need to hear. And so I've never really been one that allowed my clients to dictate pricing, although I do give them a choice and a range. But I always say, in my professional opinion, this is why I'm suggesting this price point. What do you think? 9 times out of 10, they always want to go to the highest point that I suggest. Pretty normal. Pretty normal, but at least the range I'm giving them is something that is reasonable and something that is also what could be put paper, which is really what they're after at the end of the day, is actually selling. So I agree that I think the pricing of what it's going to cost to get into a home is going to kind of stay level where we're at. You might see a little ebb and flow, but I think that where you're at is really where we're going to be sitting for quite some time. So anybody who's waiting, don't wait anymore. Just get off the fence, make a decision, because what I did hear as well this morning is the average rental rate in Spokane is the highest nationwide.
Isn't that amazing? Yeah.
I don't think it's amazing. I think it's, I don't like it. I think it's, I could go down my own little rabbit hole for that. But what I do know is that then that tells me too, okay, great. So the people that are on the fence or that are nervous about buying, like, please come have a conversation, because when you're outweighing the cost of paying someone else's mortgage versus your own, we can make things happen. We can line things up so then that way you're making that investment for yourself instead of somebody else. But to the pricing point, I think that really what's going to happen here in our area, Market Center, is you're going to see kind of that leveling off, and where we ended up last year for your the average price per home was, I want to say it's like 450,000. I don't think that you're going to see that come down much, just because we've already exposed true value to our Market Center. But what you're going to see is not such a heavy overbidding like we were seeing before. I don't think people are going to be as apt or as quick to pay that over market value price. And I don't think that people are going to use their cash reserves anymore either to get into a home. I think people are still going to be very selective and very strategic with how they get into it. And that is the one consistent thing that I am seeing with people. And that has slowed down the process to where we've only gained, I think it was 5 days additional days on market per house average from the year prior to this current year. So that tells me as well, all that we've really done is we've just gone back to a longer escrow holding time, which is typically due to hard and heavy negotiations, which is what we kind of got away from because some people were not even utilizing inspections. People are going back to utilizing those inspections. They're going through with a much more focused eyesight of what is this actually going to cost? And then they're really then sitting back and saying, okay, is it still, financially beneficial for me to purchase at this first negotiated amount, or should we go back to the drawing board? In fact, I have one right now, prime example. Went to go do a home inspection. This is why you do a home inspection. When I went to the house, it was fine. But when we went, well, there's a leak of water coming out of the chandelier in the bedroom. Chandeliers are not supposed to have water coming out of them.
No, probably not.
So that tells us we have a water leak somewhere. The cost to repair that, we don't really know. But it does mean that you have to go back to the drawing board, because either A, the seller needs to fix that and remediate the problem and not, just quick fixing, or secondary is if they don't want to or don't have the funds available, then they need to do some sort of a price reduction or credit to my seller, to my buyer, to allow them the opportunity to go and do that. So that's what I think we're walking more into, is the fun game of negotiations and how to make deals stay together, is my opinion.
Okay, so here's what I heard, guys. Stephanie thinks that the decline in the value in the greater Spokane area is probably done. Do I understand that correctly, Stephanie?
Yeah, the decline that you see it's not really a decline in housing prices. It's literally just price correcting.
Longer on the market.
Yes, because where they're pricing at, they're too high, so they're sitting on the market. So if you actually want to sell, I don't think you're losing out on value. I just think you've missed your peak of overpricing.
So
where we were at.
As a baseline here, have prices overall declined since the high in Spokane? So it's kind of staying there. They're staying on the market, and some people are giving here and there, is what you're saying.
Our trend, actually, we were still higher on our pricing from year over year. We were still up in our pricing.
Okay. How about from the peak?
Even from the peak, we were still.
Well, that kind of tells me that Spokane is a very desirable area, guys, that people want, because and it really does make sense. Real estate is very localized. So the nationwide numbers you look at doesn't apply to Spokane or maybe Seattle or wherever that you're looking at. So you need to look at the local market with a local expert. In this case, named Stephanie Murphy, right? Who knows it really, really well. And it's a normal market. I get that is what you're saying. So sellers are having to negotiate more, maybe give you toward closing costs, maybe a price reduction. Those are things Stephanie can guide you through. And so your prediction is through 2023 pricing will not go up much. It's pretty much level. Is that right?
I would say if you do see it go up, I think it's going to do its normal traditional little peak when you see it spring and summertime, because that's actively when you have more buyers. So naturally, again, you have a little bit more to pick from and you get a little bit more meat on the bone. But as far as like the major numbers that we were seeing, like the 20% increases, or even I think it was like a total of 35%, typically most houses we're seeing about $150,000 increase of value over a 4-year spread. That's not common. We already know this. So what I think, yes, I guess to confirm is I think our pricing is probably going to stay pretty accurate to where we're already at, maybe a slight bump in that. But really, Spokane was so far behind every other area that when the market took off in the boom, it literally just elevated us up to where we should have been operating at for a really long time.
Okay.
And so now that we are here, we're also, I guess, maintaining at that level that we should have been operating at.
Yeah.
And I don't think that we're going to see another surge because just in our area in itself, people can't afford it. If you can't, our surrounding area, I don't think would support much higher pricing, which would then drive it back down. So that's why I think that people are paying attention enough, and that's where it'll remain level to keep it going.
Interesting. Well, we'll look back on this conversation, guys, in a little while. There's a lot that we do not control and can't predict really well that impacts house prices and mortgage interest rates, such as wars over in Ukraine that could erupt into something different, such as inflation. And the most recent inflation numbers I've seen is inflation is it abating right now, so that's hopeful, but who knows what's going to happen here over the next year. And such as other anomalies that happen that impact interest rates and just come out of the blue. I think the expectation is, however, housing prices are probably not going to go down anymore. They're going to probably be level. I think in some areas they're going to probably be increasing because of the pent-up demand I said earlier, and rates are probably level, maybe slightly down this year because of the recessionary pressures that I see. In other words, if you want to buy, like Stephanie was saying earlier, I wouldn't delay. There is an analysis we do, Stephanie, for our clients. We can do it for yours or anybody, called the cost of waiting, and it lays it out in a very, very clear manner. It'll show you the cost of renting if you're renting right now compared to waiting to buy that home for 6 months or a year. What your expectations are going to be with pricing for both the house and the rates, and the tax implications of purchasing versus renting, and puts it all together into a very nice presentation we call the cost of waiting to see if it makes sense to rent or buy. So we're happy to do that if needed.
Yes, I think that's good, especially for the people that are on the fence about renting versus buying, but they've also been wanting to buy, but now they're apprehensive, and like there's just a lot of emotions that come with a purchase like this. I don't care if it's your first investment for your personal home, or if you've already bought 10 other investment properties and now you're on your 11th. Like it doesn't really matter where you're at in this phase of the game. It's always about risk and calculated risk and how it will play out for what your goal is now and then what it is for the near future. So I think having something or a tool like that is very helpful for people to make those educated decisions.
Yeah. The other thing we'll do is a total cost over time analysis if you do buy a house and look at the right rate and everything like that, guys. It is an emotional experience, as Stephanie said, can be very much so. Our goal is to remove the emotions and give you some good information and data and an education on what's going on, so you can make an informed decision of your own and make a good decision for yourself. So some people should be buying for whatever purpose reason. Some people leaning to buying want to know in the right manner and do it. And then, like I said, get the information and make an informed decision on it. So there you go.
Yeah. Informed decision, informed consent, all of the things. We talk about all of those because it's so vitally important. But we've skirted away from it. So we're just, let's come back.
Yeah. One of the biggest debts that anyone typically gets in their life is a mortgage. One of the biggest assets you're going to control is your home. So you want to have a pretty good deal, understanding of what you're going to do before you get there. And we'll help you with that. So guys, thanks for the conversation, Stephanie. Stephanie's information will be on the screen someplace, as will mine. If you have any questions, do not hesitate to reach out. Say hi. If you want to just chat about this, give us your opinion of where you think things are going to go. We're happy to chat with you as well about that. Right, Steph?
Always. I love a good bantering session, and I love different perspectives and opinions. Love it all.
There you go. Thanks, Stephanie. Good to chat with you today.
You as well. And until next time.
Until next time. Bye-bye, guys.